Off-plan real estate investment in Nairobi has become one of the most debated topics in Kenya's housing market. Advocates argue that buying property before it's built is a smart way to secure prime locations at lower prices while benefiting from flexible payment plans. These properties are often priced 15 to 25% below market value, making them especially attractive to buyers looking to secure properties at discounted rates. This model has gained significant traction, with off-plan sales accounting for 30 to 40% of real estate transactions in Nairobi and other booming markets worldwide in 2023. However, critics present a different story. According to a survey commissioned by Sagaci Research and McKinsey, only 40% of Kenyans would even consider buying off-plan properties. This hesitation stems from a string of missed completion deadlines and unreliable developers, leaving buyers feeling burned. In fact, 60% of Nairobians now prefer ready-to-occupy apartments due to concerns about the lack of transparency and accountability in the off-plan sector. So what's the truth? Is buying off-plan in Nairobi a lucrative opportunity, or is it a risky gamble that could leave you with regrets? To understand this phenomenon, we must first explore how off-plan buying became such a popular trend in Nairobi. In the early 2000s, Nairobi's developers began promoting off-plan purchases as a strategy to secure project funding without relying solely on bank loans. This approach attracted buyers eager to invest early, often at discounted prices, with the added benefit of customizing their future homes. As urbanization accelerated and Nairobi's population expanded, the demand for housing surged. Off-plan properties became increasingly popular among local and international investors, drawn by the potential for property value appreciation and flexible payment plans. Developers enticed buyers with attractive renderings and pre-construction layouts, capitalizing on the city's burgeoning real estate market. Over time, buyers gained access to a wide variety of residential options. Apartments quickly became the most common, offering everything from low-rise buildings in quieter neighborhoods to high-rise complexes in urban hubs. These units often range from 1 to 3 bedrooms, with some developments including shared amenities like swimming pools, gyms, and community spaces, making them ideal for both families and professionals. For those looking for even more luxury, duplexes with 4 to 5 rooms are also available, offering spacious layouts and high-end finishes for larger families or buyers seeking upscale living. Maisonettes are another popular option. These semi-detached homes are typically 2 to 3 stories tall and often include private gardens, giving families more space and privacy. For buyers who want a similar feel but with a sense of community, townhouses have become an attractive choice. These are typically attached homes that share amenities like playgrounds or clubhouses, offering a balance between privacy and shared conveniences. For those seeking exclusivity and comfort, villas stand out. These spacious single-family homes are built on larger plots of land and often feature luxury touches like private gardens, swimming pools, and high-end finishes. They cater to buyers looking for privacy and the best of what real estate can offer. A newer trend gaining traction is mixed-use developments. These combine residential units with commercial and retail spaces, offering the convenience of living, shopping, and working all in one location. These projects are particularly appealing in Nairobi's urban areas, where space is at a premium and convenience is key. This range of residential options ensures there's something for every buyer, from young professionals looking for a sleek apartment to families seeking room to grow or high-income investors chasing luxury and exclusivity. Next, we'll dive into the advantages and challenges of investing in off-plan properties to understand why they're so attractive and what risks they carry. Investing in off-plan properties comes with several advantages that continue to make it an appealing option for many buyers. One of the biggest draws is the opportunity to buy at lower prices. Developers often offer discounts of 15 to 25% below market value to early buyers, providing significant cost savings. This makes off-plan properties especially attractive for first-time buyers and investors seeking high returns on their investment once the property is completed and its value appreciates. Another key advantage is the flexibility in payment plans. Buyers can spread their payments across a construction period, reducing the financial strain compared to paying for a completed home up front. This feature is particularly beneficial in Nairobi's competitive real estate market, where affordability is a critical factor for many potential homeowners. Off-plan properties also allow buyers to customize their future homes. From selecting finishes to altering layouts, buyers often have the chance to tailor their properties to their preferences, making the final product feel more personal and suited to their lifestyle. This level of customization is difficult to achieve with already completed properties. Additionally, there's the potential for capital growth. By the time the property is completed, its value is often higher than the purchase price, allowing investors to enjoy a considerable return on investment. In fast-growing markets like Nairobi, this potential for property appreciation has drawn local and international buyers alike. Finally, off-plan purchases come with the allure of modern designs and amenities. Developers frequently market their projects with features like energy-efficient systems, smart home technology, and premium shared amenities such as gyms, pools, and communal workspaces. These contemporary elements enhance the overall appeal and marketability of off-plan properties. However, while these advantages are compelling, it's important to consider the potential challenges and risks that come with off-plan investments. In the next section, we'll explore the downsides from construction delays to developer accountability to get a full picture of what buyers should watch out for. While the advantages of investing in off-plan properties are undeniable, the challenges and risks associated with this type of investment cannot be ignored. One of the most significant risks is construction delays. Developers may fail to meet projected timelines due to financial difficulties, labor shortages, or mismanagement. For buyers, this can lead to extended waiting periods before they can move into their new homes or start earning rental income. Another major concern is the possibility of project abandonment. In cases where developers run out of funds or fail to secure enough buyers, construction may halt indefinitely, leaving investors with nothing but a paper contract and shattered expectations. According to a 2020 article in Business Daily, such scenarios have become alarmingly common, with some high-profile projects leaving hundreds of buyers in limbo. Quality issues also pose a significant challenge. The finished property may not meet the standards promised in marketing materials, leading to disputes over poor construction or substandard finishes. For instance, some buyers have reported receiving units significantly different from the layouts that they were initially sold on, resulting in costly renovations to meet their original expectations. Additionally, there is a risk of fraud and dishonesty. Unscrupulous developers have been known to sell the same unit to multiple buyers or misrepresent the legal status of the land on which a project is being built. Such cases highlight the importance of thorough due diligence before committing to an off-plan purchase. Finally, regulatory gaps can exacerbate these risks. While efforts have been made to tighten oversight in Nairobi's real estate sector, enforcement remains inconsistent, leaving buyers vulnerable to exploitation. These challenges make it clear that off-plan investments are not without their pitfalls. However, understanding these risks and knowing how to navigate them is key to making an informed decision. In the next section, we'll delve into the reality of investing in off-plan real estate in Nairobi, balancing the potential rewards with the risks to help you decide whether it's worth it. The data tells a clear story. According to a study by Stephen Githai Njaramba, Paul Gashanja, and Charles Mugendi, published in the International Journal of Economics, the growth in housing prices in Kenya has far outpaced GDP per capita growth since 2006. Using 2000 as a base year, the study measured the average selling prices of apartments, bungalows, and maisonettes in major urban centers in Nairobi. The findings reveal a sharp rise in housing prices, especially after 2005. However, the exact cause of this growth remains unknown. While the study suggests that the increase in the middle income population might be a factor, this is ultimately speculation. For context, GDP per capita refers to the average income per person in the country, calculated by dividing the country's total economic output by its population. Essentially, it provides an estimate of what the average Kenyan earns annually. When we compare this to the rapid rise in housing prices, it becomes clear that the cost of real estate has far outpaced income growth, making home ownership increasingly unaffordable for many. From my own research, including interviews with homeowners in areas like Karen, a consistent theme emerged. It was significantly more affordable to acquire land before 2006 than it was after. Many Nairobi residents across various regions agree that a combination of rising land prices and greater competition for housing contributed to the steep increase in property values after this period. Despite these challenges, off-plan sales remain a crucial part of Nairobi's real estate market. They provide an entry point for buyers into an otherwise expensive market by offering properties at 15 to 25% below market value and enabling payment plans that spread costs over time. For many Kenyans, real estate continues to be the most reliable asset class, preserving and growing wealth over time. It's no wonder that it remains the preferred investment option for the middle class. Moreover, government protections for buyers have significantly improved in recent years. Stricter regulations have increased transparency and accountability, reducing risks like project delays and fraud. With demand for housing consistently outstripping supply and property prices on an upward trajectory, off-plan investments have cemented their place in Nairobi's real estate market. For anyone considering an off-plan property, the key takeaway is this: the opportunities are substantial, but so are the risks. By doing your homework, researching developers, understanding contracts, and seeking professional advice, you can navigate this market wisely and make decisions that benefit you in the long term. As housing prices show no signs of slowing down, off-plan real estate remains a pathway to home ownership and financial growth for those who invest with their eyes wide open. If you're interested in owning a piece of Nairobi, there's no better place to start than the Richmond Real Estate Expo. At this one-of-a-kind event, you'll have the opportunity to interact directly with a variety of developers to find the projects that best suit your preferences. Whether you're looking for a sleek apartment, a family-friendly maisonette, or a luxury villa, this expo connects you with the experts who can guide you. If you're interested, click the link in the description to register your interest or to connect with our partnered industry experts. Whether you have questions about specific developments, want advice on navigating off-plan purchases, or need guidance on finding the perfect property, our experts are here to help. Don't wait. Take the first step toward making your property investment dream a reality today.